Hi everyone, and welcome to this afternoon. Well, it's afternoon for us here of the webinar. But I'm looking down the attendee list. I know we've got traders who come from all parts of the world. I think someone's from New Zealand. If you'd like to put down where you're from, that would be lovely, and then we can get the greetings right. But before we start the webinar, can I just draw your attention to the disclaimer that I know you can see on your screen. Trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I know we have, as I said, having looked through who's with us today, I can see we have some of our forex program students, we have some of our quantum software users, and I think we've got a few people who've bought my books, and I think some new people as well. So into whichever category you belong, you are all very welcome. So before we have a quick look at the charts, we start with the charts. The methodology that we'll be looking at using to analyze the charts is volume price analysis. Details are in the books that are on Amazon. This is the first book, if you like, the book that kicked it off. It's all explained there. It's the relationship between the price action and the volume, the participation, the activity, to basically confirm for us whether what we are seeing on the chart is genuine or not. That's really all it's about, because if it's not genuine, then we are going to be ensnared in a trap. Lots and lots of traps are laid for us as traders by the insiders, the market makers, the smart money, call them what you like. They operate in all the markets. And the beauty about this methodology is that you can apply it to all the markets. You can add in any time frame. We call this session day trading because it's really, we look at the faster time frame charts, but as I said, with VPA, you can use it for investing. You can use it on stocks. You can use it on sort of medium term time frames, such as the hours or the 4 hours or the 30 minutes, or you could use it on scalping. How you approach the markets, either for trading, really does depend on you and what you find comfortable. Not just in terms of your confidence, but how much emotion is churned up inside you, because at the end of the day, what you're facing in trading, you are facing the potential of a loss, and it's whether you can handle that thought that yes, you are going to lose money. It's an uncertain world we live in, as we all know. The markets are hugely uncertain. VPA will give you an insight that we believe other methodologies can't or don't. It doesn't mean you can't combine it with other approaches, with indicators. We use indicators, we use our own indicators. But at the end of the day, the time frames that you choose to trade, the instruments that you choose to trade, you have to be comfortable with them. But you can only find out what you're going to be comfortable with really through trial and error. But at least with VPA, with volume price analysis, we believe, David and I believe, it does give you a head start, because the whole methodology is premised on the anticipation of what is likely to happen next. And that, I can assure you, takes away an awful lot of stress. What I've also done with the books is the volume price analysis book is it has a companion where basically there are worked examples of this methodology, because like in this market, it's a market of patterns. It's things repeat. You know, what you see one day, you may see in another instrument a few days later. And depending on the volume, whether that pattern will actually play out or that trading setup from a price action perspective plays out will depend on the volume. Is it genuine? The only way you can do that is it's got to be supported by participation, and participation not just on the retail side, but by the people who have the very deep pockets. Right, that's what I'm want to start with for now. It's the end of the week, almost the end of the week. It's the end of the month as well. We're all, both David and I are feeling a little bit, oh my goodness, it has been a real roller coaster this month for all sorts of reasons, not least the pandemic that we're all still living through. Markets as well are, how can I say, they are, the best I can say is they are totally ignoring the fundamental news. We've had it here today. I think it's all over and done with, apart from we've got natural gas and we've got the inventories. Oh, the inventories have been. I'm sorry, I haven't actually refreshed my my forex factory. That's all, but basically it's all been and gone. The most important items of news that we've obviously had preliminary GDP for the US, which was terrible, which is what you expect. This is quite an interesting, well, a very interesting release. It's the durable goods orders. It's down at -17, not quite as bad as they anticipated. They suspect that that is only it's not the worst. The unemployment claims, another, what is it? I think another 3 or 4 million have been added on this. Here we are in unemployment claims. Another 2 million, 2.1 million have been added. The extent of the damage done to not just the US economy, but all economies, is really going to play out next week, because we're going to start, we will have the figures for when this epidemic has been at its worst. Markets are kind of ignoring that at the moment. Here we are. Where are we with investing.com? The Dow is up. The NASDAQ has been a bit sluggish, but it's up 88. It's one I've got up on as one of my charts, and the S&P is up 16. So in terms of market sentiment, it's all looking pretty positive. As I said, it's the end of the month. You've also got to factor in at the end of the month, there's a lot of squaring of what we call squaring of positions. Fund managers have got to, write reports to their investors. In forex, for example, we've had ongoing. We have what's called a rebalancing. The investment banks, they've got they buy great blocks of currency and sell currency. You get a lot of volatility in the forex market around the London VIX. That's all gone now. That's all finished. So what we're left with at the moment in terms of potential trading opportunities at this particular time is, well, actually, it's not been too bad. We have a specialist indicator here, the CSI, the currency strength indicator, and each of these lines represents flows into an individual currency. And if we look back earlier today, this was around sort of lunchtime-ish our time, all the lines were sort of in the center of the indicator. There wasn't a lot of divergence. Since then, we have had divergence. We've had flows into the euro. We've had strong flows out of the US dollar, which you do sometimes get at the end of the month. There's quite a lot of dollar selling for various reasons. Very heavy selling of the Canadian dollar. The yen is going down, which is good in terms of market sentiment. Swiss franc is going up. Not that the SNB isn't going to be very happy. That's the SNB is the Swiss National Bank. They are notorious for intervening in the market to try and to keep the value of the Swiss franc down. Swiss franc is one of those safe haven currencies. People like to buy it because Switzerland has got this this reputation, as I said, as a safe haven. Nice buying in the British pound, and we've had some it looks as though we've got a bit of a turn on the New Zealand and the Aussie. And the one I've actually been looking at is the Aussie dollar. My charts are on NinjaTrader. What I also want to have a look at today as part of a VPA is we've been looking at reversals, looking how candles, we look at specific candles that are going to pick up a potential reversal. Today we're going to look a little bit more about patterns, and in fact it was highlighted by one of our traders in our VPA room, and I think one of the people who contributed to that is here today. I'm really grateful, so I hope they don't mind me mentioning it. It's on the hourly chart. It was actually a double top. It's just one pattern, And when that pattern actually plays out, as it were, especially on a slightly slower time frame chart, you can really get some nice moves. And we've seen that particularly, as I said, on the Aussie dollar. Before I pass over to David, what I also want to have give you an indication of is one of the indicators that we have developed. This is just for the NinjaTrader platform. It will also be available for TradeStation. It's what we call our Tickspeedometer. When markets are in this kind of mood, not so much mood, in condition in terms of, yeah, they're kind of moving up, but there's not a lot of momentum. There is participation. It's all a bit, as I said, it's got this. As you trade more and more, you get a feel for when the price action is just a bit sluggish, it's just a bit desultory. It's still moving, but it's not going, at a good pace, as it were. The candles will tell you that if you get a lot of doji candles, a lot of congestion. But what we've developed for NinjaTrader is a very specific indicator which actually measures the activity that is going on within the candles, if you like. It tells us, is it just moving very slowly? And I've actually got here the Aussie dollar, which had been moving quite nicely higher. As we can see here, we've had this sort of a little bit of a sort of downwards drift, and then it's attempted to rise a little bit more. But this is the best I can describe, is sort of drift. What this is telling me, yes, it's moving, but boy, oh boy, it's not really moving very fast. It's sort of this color code here. You have this little burst of activity when you have green, the amber is in between, and the red now, it's really telling us it's, it doesn't look as though it's going to go anywhere very fast soon. It actually measures the ticks going through. This is on the equivalent of the 3-minute. So on the 3-minute chart, the ticks going through, the actual is 733 ticks. David will explain a little bit more about it. He tends to use it much more with the futures, where you really do have to know if there is participation in the price action that you are seeing. I use it pretty much to give me a flavor of what is actually going on behind the price action, because when things start to slow down, and especially if you're on the faster charts, you really don't want to be hanging around too much, because something could come in very quickly and basically upend you. The Renko chart fulfills that sort of function as well. This is actually, again, on the Aussie dollar. On the NinjaTrader, it works very different to the MT4, MT5. You have the option to set the Renko values according to the time charts, which you can't do on the other two platforms. They works equally well, but it works in different ways. So if I click the 1-minute chart here, what the indicator does, it calculates what the brick size is for this particular time frame. The Renko is nothing to do with time. It's simply the number of pips that have to go through before a brick completes, or a little candle that we have here. And at the moment, each one will complete at 1.5 pips. But as you can see here, it's kind of drifting sideways. We've got this nice support level here. Where are we going? I've got a Camarilla on here. It's desperately be trying to get to the 66.85 level, but as you can see, it's not exactly moving fast. When the market is moving fast, you will get a line of these bricks either up or down, and that's the kind of trying to give you an idea of the speed. But I've got the tick speed here, so yeah, there's something going on, but there's no momentum at the moment in this particular pair. So any questions on anything we say, please just drop them into the chat box. More than happy to answer them for you. So it'll be a combination of looking at different instruments, elements of volume price analysis to tell us what has been going on, but more importantly, what is likely to be happening next. Using the indicators as well, and really putting it all together not just from the technical picture, but also looking at, you know, well, we've looked at the fundamental news. If there's any other news that might come in and upend what's going on at the moment, well, you know, Donald Trump Twitter feed is a classic one, because that's how you have to look at the markets. You can't just focus on the chart. You have to be aware of what is going on in the broader market.